Hey traders, David Frost, LazyGapTrader.com. In this video, we're talking about day trading. More specifically, we're talking about gap trading and how gap trading is by far the single most consistent and profitable day trading strategy you're going to find across the markets today. In this video, I'm going to show you two specific examples of today's trades, how they worked, why they worked, and how you can use this strategy each and every day to produce income from the market on a very regular basis. I do a couple of things. The first one is I teach a course where traders learn two specific gap trading strategies. The first one is known as the morning gap trades. This is where stocks that are gapping higher or lower at the open create an opportunity. And the opportunity for traders is when they can identify a specific price where these stocks will first be drawn to like a magnet and then have a price reaction from in the other direction. The second strategy taught in the course is known as the gap fill trades. This is where stocks that did gap higher or lower at the open on any particular day, they leave what's called an open gap. At some point in the future, these open gaps will be filled, and I'll show you a specific example of one of those in this video as well. The other thing I do is give traders an opportunity to get my gap trades each and every day sent to their inbox at 9 o'clock a.m. Eastern Standard Time, 30 minutes before the markets even opened for business. Here's a copy of the email that went out to subscribers this morning. As you can see, it arrived at 8:58 a.m. Eastern Standard Time. This morning, we had 6 potential morning gap trades on the board. We're only interested in taking the trades that hit the specific price levels that traders learn how to calculate in the course. These are the highest probability trades on the board. If a stock does not hit the specific price level that we calculate, it's a no trade, it's off the board. We only want the highest probability trades we can find. Out of this list, one of these stocks so far today hit its specific price level, and it's ERJ. Gap lower, support levels are $20.07, $19.21, and $17.58. Stop and profit target is about 18 to 35 cents. These are minimum profit targets. Another one of these stocks, IPXL, came within pennies of the level and ripped higher. You can see where I say gap lower, support levels are 1673, and then I gave a secondary level. The stock came to 1680 and absolutely ripped higher. That happens sometimes. It's called front running. We got front run on the number. Some of the traders made a ton of money in this stock. We'll quickly take a look at this chart as well. In addition to the morning gap trades, I also give a list of gap fill trades each and every morning. These are stocks that have an open gap that at some point will be filled. As you can see, the 7th one down on the list, CNC, where I say the gap fill level is $93.68. It's a short trade, meaning once the stock came up to that level, we were interested to short the stock, expecting a pullback or it to trade lower away from that level. We'll also take a look at this stock to see exactly what happened with this trade. We're on the chart of ERJ, and as you can see, the stock closed yesterday at $21.42. It was gapping lower at the open and traded lower, coming right into our level at $20.07. Traded lower slightly, but well within our stop loss limitation. It reversed and began trading higher immediately. The stock has already made a high of $20.38, and as you can see here, it's what we call consolidating to trade higher yet. The probabilities are that as the day goes on, this stock will trade higher. We most likely have found the low of the day in this stock, which we do many times with this strategy. You can see the importance of the $20.07 level. The stock came into that level, did trade slightly lower, but immediately popped back over the level. It shows the importance of this price level, and traders learn exactly why this is important when they take the course at Lazy Gap Trader. Learning why this is important gives traders an added confidence when taking the trades because they have an expectation that this particular price level was going to be supportive of the stock. It takes a lot of the stress away from these trades. As we know, trading is an emotional business, and if you can relieve a lot of that emotion from the trades, you can find success a lot faster. In the course, traders learn how to calculate these levels, and then they learn exactly why these levels are important to these stocks. Here's a chart of IPXL, and remember the level from the email that went out this morning was at $16.73. And as you can see, the stock made a low this morning of $16.80 and reversed higher. And look at this rip higher that it's taking now. It's over $18 a share. And on a $17 stock, that's a tremendous gain. We missed it by a few pennies, or at least I missed it by a few pennies, but somebody got it. There were traders that took this trade early, and they were rewarded handsomely. Now here's a chart of the gap fill trade I mentioned, CNC. Remember from the email, we were interested to short the stock at $93.68. The stock traded higher this morning, right up into that level, went slightly higher, made a high of 94.02. That is well within the stop loss limitation as outlined in the course. And just minutes later, the stock was already at a low of 92.91 and continues to trade lower away from that level as the day goes on. That's another positive trade out of the morning gap trade strategy and the gap fill trade strategy. Folks, gap trading is something that you can learn how to do for yourself each and every day and use for the rest of your trading career. Everything you need to know in order to be successful trading the gaps is found in my course at Lazy Gap Trader. Not only that, but any trader that takes my course gets my full and complete attention for support. No question ever goes unanswered. I'm David Frost, Lazy Gap Trader. Thanks for tuning in, folks.